So there's a lot to watch, and President Trump is still in Asia in the early part of the week, so we watch for headlines.
Walmart's going to be a big one for tech reasons.
Yeah,
Can't remember the last time that happened.
Let's get to the judge on the Intrepid celebrating Veterans Day.
Today, Americans from sea to shining sea honor our veterans, the men and women who have fought to keep this great nation free. The Halftime Report team is honoring those brave men and women as well. As we host soldiers, sailors, members of the Air Force and Marines, our mission is clear. Through this historic market and brightest investors on Wall Street. Today, we're talking stocks as we tip our caps to the men and women of the United States Armed Forces. Now, a special edition of the Halftime Report with Scott Wapner, live from the Intrepid Sea, Air, and Space Museum.
Hello and welcome. It is great to have you with us today.
Yesterday also, which we'll be at. So there's a lot to watch, and President Trump is still in Asia in the early part of the week, so we watch for headlines.
Walmart's going to be a big one for tech reasons.
Yeah,
Can't remember the last time that happened.
Let's get to the judge on the Intrepid celebrating Veterans Day.
Today, Americans from sea to shining sea honor our veterans, the men and women who have fought to keep this great nation free. The Halftime Report team is honoring those brave men and women as well. As we host soldiers, sailors, members of the Air Force and Marines, our mission is clear. Help guide them through this historic market rally, giving them access to some of the best and brightest investors on Wall Street. Today, we're talking stocks as we tip our caps to the men and women of the United States Armed Forces. Now, a special edition of the Halftime Report with Scott Wapner, live from the Intrepid Sea, Air, and Space Museum.
Hello and welcome. It is great to have you with us today. We are so honored to be here on the Intrepid with an all-veteran lineup of special guests. A very special thank you as well to our live studio audience today for braving the cold to mark this special occasion with us. Several of our trainers are with us today. We're going to get to them in just a few minutes, but with me here on set inside this giant ship to kick things off today, our very own Joe Terranova, Army veteran, West Point grad, and Wall Street giant Vinny Viola is here. Stephanie Link is as well, along with Navy veteran Jim Lebenthal. Jimmy, we salute you, of course, and your service to this country. That's an honor to have you here. Vinny, it is certainly an honor and privilege to welcome you to this show as well.
It's my distinct honor and my distinct pleasure to be here.
Will you tell me first and foremost what Veterans Day means to you?
Well, for me, it reminds me of the service performed by the people, the soldiers, sailor, airmen that came before me. In my particular family, every one of my uncles that could served on both sides of my family, not only in World War II, during the Korean War, and even during the Vietnam era. And then, of course, my generation, myself and my brother both served. So it means the sacrifice of those that have come before us on many, many, many fields across many geographies.
How do you think it has shaped you as the man you are today, a titan of business, a titan on Wall Street and all the other business interests that you have?
I think it's everything I am has been informed and formed by the physical and intellectual experiences I had in the military. I was 17 years old and 3 months when I entered my first day of Beast Barracks at the military academy. And every day of my life has been informed by my experience as a soldier. I always say that you might take the uniform off of your body, but you never take the uniform off of your soul and your heart.
I've also said today, you may take the uniform off as a serviceman or a servicewoman. You just simply put a different uniform on when you become a professional, but you really, truly, as you said, never forget who you are in your soul as a soldier.
Thank you. And thank you, Scott, for acknowledging this solemn day, because it truly is a solemn day. we recognize the sacrifice of those who've come before us and the risk and the daily toil put forth by the persons in uniform today.
You've served your country, as we said. Some of you may know, others watching may know that Vinny may have been the Secretary of the Army. Of course, that didn't come to fruition. You said you were devastated by that, and you've never spoken publicly about it since that day. Does it still hurt?
Well, it's actually the single greatest failure of my life. I wasn't able to be in that life position where I can do it responsibly. And it's heartbreaking. And I find ways to serve on a daily basis. That's my pledge to myself.
It's interesting. It's been, and most people certainly in our line of work know you of Virtu Financial, the firm that you founded and the contribution that you make on Wall Street. So I'd like to ask you a little bit about what we're witnessing in the markets right now, 1 year in to President Trump. Are you surprised that it's been the calmest year on record for stocks?
I'm actually not. I think many of the ingredients around the performance that we're seeing across sectors in our economy were put in place by, as I view it, a very a period of responsible review, of regulatory review, of macroeconomic review, of monetary policy review. And that's been going on, I think, since the crisis period. So the fact that we've been enjoying the benefits of a historical period of ease in monetary policy, of creativity being brought to the marketplace. I mean, the gains in productivity, there's no small reason why we're enjoying these significant valuations because of the combination of ease of monetary availability, enormous amount of responsible regulatory review, and creativity being brought to the marketplace across all sectors.
We know that the president, of course, likes to mention what's happened in the stock market since he was elected to office. New records, seemingly every day,
right.
Every week, every month.
Right.
How responsible do you think he is for where the stock market is today?
Oh, that's a tough question. That's a tough question. I think markets are driven by the perception of stability and the perception of the current state of trust in the market's reliability. And I think this president has done a fantastic job of heralding trust in terms of his approach to regulation and in terms of his desire to promote a pro-business environment. And of course, his tax policies are universally accepted. If I could be a little bit sort of over the top, generally speaking, lighter tax burdens promote creativity and courage in the entrepreneurial class, generally speaking. We have many economic models that can talk back and forth about what does a dollar of tax relief translate to in terms of economic productivity and economic measure. But for sure, this country is driven by the entrepreneurial class, always has been. Remember, 3 ingredients form the basis of our current form of capitalism. The idea that personal industry, personal liberty, and personal responsibility can be and would be rewarded on the commercial street. Yeah. And I think that's really a great reflection on the principles that drive our form of capitalism. So I would have to say I give President Trump an A+ in terms of heralding respect, reward, and encouragement for the entrepreneurial class and the business class. That's a fantastic spirit to infuse.
The real question, Jim, is what happens now? We've had a great year. It's been a great first year for investors in the stock market under President Trump.
Yeah.
What happens now?
Well, I was listening to Vinny's comments just now, well made, about trust in the market. And I think there's another element that comes into it, which is, just to be very simple, profits. And we see profits growing next year. It's a question of how fast do they grow, and that's where the tax reform bill comes in. I think the market has been adjusting this week to various forms of the tax reform, whether corporate tax rates get phased in over several years or all at once. The short answer to your question, though, Scott, is that profit growth, not only here in the U.S., but across the globe, is strong enough that the market should go higher. It's just a question of how fast it goes, and that comes down to tax reform here in the U.S.
Yeah, it's interesting today, Steph, Tony Dwyer, frequent guest on our program, Canaccord Genuity, likes to kick it around with us, and he's been mostly bullish. He says in a tweet today, and I'd love your reaction to it, and then everybody on the panel certainly to chime in, and I quote, "First time in a while, put us in the correction camp. Deterioration of the transports, which are a key indicator for some of where the market may go from here. The percentage of stocks above their 50-day moving average, excessive bullishness, says looks for a correction of 3 to 5%, but that should be bought." So Steph, what's your feeling? Are we primed for a correction of perhaps 3 to 5%?
Well, we could get a 3 to 5% correction in a day or two or a week, and so it could happen so quickly in this day and age. But I do think that you want to buy any kind of a pullback, and it goes back to what Jim just talked about and what Vinny talked about in terms of economic growth is definitely better here in the United States. It's also better globally, and that is translating into better earnings. We just had the 4th consecutive quarter where revenues grew mid-single digits. That's really impressive with a 2.5% GDP economy here in the States, and it does speak to the global synchronized improvement in the world. So I think that continues. I think earnings this year will be about 10%. Maybe it's not going to be as strong, depends on tax, depends on a lot on fiscal policies here and around the world. But I do think you're going to still see good earnings, and you know that stocks follow earnings. And therefore, I think you want to be buying the dips, and I think you want to buy more of the cyclical companies versus the defensive ones.
You saw, though, yesterday, Joe, at this notion, and when the news was reported that corporate tax cuts may be delayed until 2019, market went down 200 points in fairly short order. You're looking at the worst back-to-back days for the S&P since the summer.
Of course, because there's the premise that monetary policy needs to hand off to fiscal policy.
Are we that reliant on tax policy at this point?
We are reliant on fiscal policy to step in the place of monetary policy. When you bring forth the mention of 2019, that is not very encouraging for an investor. But the process of what we all do is about educating. It's about education. That's why costs are compressing as dramatically as they are. And I think what's important about this week is to find out not so much what we know, but what we don't know. So no one has really mentioned the Sprint T-Mobile deal breaking up on Sunday night has been the catalyst for the significant outflows, nearly $900 million out of the high yield market. Markets are highly correlated, and that's spilling over into the equities market. And I agree with what Stephanie's saying. That's not a reason to throw away your portfolio.
Your business, Vinny, Virtu, is directly impacted by volatility or lack thereof. Do you expect a pickup in volatility in 2018?
It's funny, Joe and I were talking briefly before we came on air. I think volatility, as you and I, Joe, Steph, and Jim were raised on Wall Street to understand it, is changing in its form and nature. So you see sharp price reaction to non-existential events and non-trend events will affect prices in the short term. What appears to be highly volatile activity actually really isn't. It's really because of enormous collective access to trusted prices. The markets have never been able to be accessed with the amount of liquidity and the amount, quite frankly, of trading access that it has today. So you get sharp price movements that get mollified. So that's a very long kind of Vinny answer to your question, which is to say, I don't expect a change in the range of volatilities. I do expect a change in the nature of volatility. So I think realized volatilities may be generally in an upward trend.
How concerned are you personally, the people that you speak with? How concerned should investors be, whether they're here in the audience or watching at home, about North Korea, the impact that could have? And remarkably, the inability of the stock market to seemingly show any reaction to a nuclear test halfway around the world, or multiple tests.
It's interesting. I qualified my comment about volatility, and I identified non-existential impact. I think the Korean Peninsula has the potential to create an existential economic condition. Not so much for the advent of some conflagration, but more for the perception and its impact on the relationship between the United States and China. As a macro political economic concern, Korea is as much to do with the Chinese-American relationship as it does the non-predictable behavior of the current leader of North Korea.
We're certainly thinking about it as the president winds up his way through Asia. We are just getting started here. We have so much more coming up on this special edition of the Halftime Report.
Day edition of Halftime Report, live from the Intrepid Museum. Navy man, former New York Giant, and now Wall Street executive Phil McConkey comes aboard. He's now shaking up Wall Street, helping run a military veteran and disabled veteran-owned investment bank. Phil McConkey joins us on the aircraft carrier Intrepid live. Before the break, our data partners at Kensho show investing between Thanksgiving and the New Year is a good way to go. The Dow is up on average 2.38%, the S&P up 2.11%, and the NASDAQ up 2% between the holidays since 2010. For more, go to cnbc.com/Kensho. The Halftime Report, live from the Intrepid Sea, Air, and Space Museum, returns in 2 minutes. This special edition of Halftime Report with limited commercial interruption is made possible by Boeing. Boeing is committed to veterans and thanks them for their service. Boeing, veterans make us better. The CNBC IQ 100 Index, beating the broader market over 1 year, up 20%. Today's leaders include AMD, Neighbors Industries, and Micron. The laggards, Johnson Controls, Cardinal Health, and Medtronic. For more, go to cnbc.com/IQ100. This is a special edition of the Halftime Report, live from the Intrepid Museum. Now, once again, here's Scott Wapner and the Halftime Report Traders.
All right, we're back on the Halftime Report on CNBC. So, what do the Navy, the NFL, and Wall Street all have in common? The Super Bowl legend Phil McConkey, that's what. Once a naval officer and helicopter pilot, Mr. McConkey is now president of Academy Securities. We're also joined here by the Academy Securities founder and CEO, Chance Mims. He himself a former U.S. naval officer. It's great to have both of you here with us. I'm surprised the Giants haven't called you because they need some help, especially a wide receiver.
Need a lot more help than just me, Scott.
They certainly do. Chance, it's great to have you as well. Why don't you talk to us about the founding of Academy Securities, how that came about? Did you guys know each other? in the Navy at all?
We met each other, not in the Navy, but we met each other through a mutual friend from the United States Naval Academy. We came together, and really, our firm's a military veteran-owned and operated investment bank that caters to institutional clients, and so bringing together Wall Street experts alongside military veterans, and great culture at our firm. We're about 40% staffed by military veterans, 85% of our leadership, and 65% of our ownership in the hands of military veterans.
Why is that so important to you?
Yeah.
We talk about, not always making the transition from uniform to out of uniform is easy, especially in the field of finance, very specialized industry.
No, it's tough. I remember getting out myself. I'm a post 9/11 veteran and being pretty nervous about how my skill sets translated over to the private sector. And so it's all of our peers that we're hiring, and we're hiring them because we see something special in them, the skill sets they learned on deployments overseas. And that any company wants the teamwork, the camaraderie that you find in these military veterans. They're going to be successful wherever they're at, and they're team players. You didn't get paid a whole lot in the military. It wasn't about the paycheck. It was about being part of something bigger than yourself, and that's what we want, that culture.
Most important skill, Phil, that you took from the Navy?
I think when you look at, here's a living, breathing example of it right now of great success, where Vinny comes from in Brooklyn, where I come from on the west side of Buffalo. I think more important, and we talk to our people all the time about this, the one great trait of military veterans that they all have is grit. If you have grit as a human being, you can overcome any obstacle. Vinny again is asking me, what did you play at the NFL? 158 pounds. I needed a heck of a lot of grit to survive at that level.
You're giving hope to all of us, perhaps who aspire to be professional athletes. What do you think about the markets where we are? I know they're near and dear to what you do on a daily basis.
I think for us, dealing with institutional clients and us in our little firm, Vinny talked a lot about the entrepreneurial spirit, what really drives America. We're an entrepreneurial firm. We started this from scratch. And when you look at what's going on right now with tax reform, that's important to go from 35% to 20%. That allows us to take that money and reinvest it in our company and hire more veterans and disabled veterans. And what does that do? It spurs the economy. But more important than that, I think when you look at the market and the nice run that we've had, people say it's in anticipation of tax reform. Look, I don't have a lot of trust in Washington. I have trust in military veterans, and I think when you look at the deregulation, over 800 rules and regulations have been eliminated. For small business, that is like a juice, an elixir that helps you continue to grow, reinvest in your company. So that more than anything, if we do get tax reform, I think the market will go higher from here.
What if we don't?
If we don't, well, I think we're pretty good right now. When you look at where we are as a firm, again, that 35 down to 20 is substantial. For our small firm, for corporations across this country, it'll be a big shot in the arm. I hope it gets done.
The trillion-dollar question really is, how reliant is the stock market on tax reform? How much of tax reform expectation chance is already in the market, if anything at all? No one seems to have a clear answer as to what truly is in the market, though you got a good indication yesterday on word of the corporate tax delay, as I said, and the immediate impact in stocks.
Listen, the tax reform is something that's important, but there's also the regulatory environment. There's already been 800 regulations that have been reeled back. We can tell you as a small business, now it hasn't come for us yet because we're in the finance industry, but we anticipate that coming. But other industries are already seeing that. And if you're a small business, and we were built during the time with this regulation in a hard time, difficult times, that almost put us out of business many times. So that rollback of regulation for a small business, and my friends that own veteran-owned businesses out there that are doing pretty well right now because they're able to do more business without the regulation. Now, we're not looking in the financial sector, we're not looking for a return to pre-2008. We're looking for a calibration. You're looking for, smart regulation is what we're looking for.
And is that calibration more of a catalyst in 2018 than the possibility of tax reform? Because we haven't seen that calibration in the financial industry just yet.
Not yet. I mean, you haven't got the right people appointed yet in the position, so we haven't seen that yet. But yes, I think that is ongoing. I think it's going to happen in the financial services industry. You're going to see some calibration that's going to help the market's going to help firms like ours, going to help entrepreneurs.
You have a thought as well on that note?
No, I think Chance said it best, quite frankly. I think responsible review is the period we're in, and I think I'm very bullish around our regulatory environment going forward.
What do you guys make of what we've witnessed in the bond market of late, specifically junk bonds, where they're at 7-month lows? Jeffrey Gundlach, well-known bond fund manager, tweets yesterday, junk ETF down 6 days in a row, closing near its 7-month low. SPX, that's the S&P 500, up 5 of the last 6 days, closing at an all-time high. Which is right? Which is telling the right story right now?
There's been, we think that August got a little overheated, and there was some new issue in high yield that came out and got overpriced, and we think this is a correction right now. There's been 620 million in outflows of ETFs, 1.5 billion outflows of loan funds. It's something to watch, but we don't think that it's the beginning of a trend. It's something to keep an eye on. What we find interesting is that you really don't see the geopolitical world that is actually people are paying attention to. And one thing that we do, we have 10 admirals and generals that have had boots on the ground that know what's going on around the world, and that's where we pick our place to help our clients really figure out what's going on. And it seems people have become pretty numb to what's going on. The markets aren't affected by the headlines out there, and there's some serious stuff going on right now.
I'm sorry.
It's interesting when you talk about all that, the geopolitical events. If you're involved in capital markets, you're managing assets. What happens in the Straits of Hormuz can greatly affect your business. Yeah. So to have that kind of expertise at our fingertips is a great value add for our customers. I really need to say, with this incredible audience that you have here today, we talk about commerce, we talk about rates, we talk about the stock market, but without the brave servicemen and servicewomen that we have deployed 24/7 around the world, none of this matters. They are the guardian angels, not only for the United States of America, but for the world. If not for them, we wouldn't enjoy this prosperity. And by the way, there are World War II veterans out in the audience, Vietnam veterans who, by the way, really need to be commended. They didn't get their just due. And then post 9/11 veterans. We joined the military after a war ended, you and I.
Yes.
Many in our audience today joined the military after war started. When you think about where we are in the direction of our country and you talk about headwinds and problems, all you need to do is go meet some of these young men and women and see who they are and their character to join the military. They joined, they volunteered, and this is the best we have to offer. There's some greatest generation members in the audience. Thank you so much. These post 9/11 veterans, the next greatest generation. And I'm in awe of them, and I'm in awe of their service, all of you.
And by the way, happy birthday to the United States Marine Corps. We got a lot of Marines.
Hurrah! Very well said by the both of you. Thanks so much for being here, Chance Mims, Phil McConkey. We're not done with you, though. We're definitely not done with you, Phil, because come on over here. The people in the studio audience got numbers, and they put them into this box where we're going to toss some footballs out. So go ahead and pick a number, and then we're going to have a friend of ours come over and help us do this. Get an autographed football, Phil McConkey. Midshipman Wilson.
I see these balls and I do this. I sense memory. I can't help it.
Thank you for being here.
No problem.
You want to read the number? Bring this nice football autographed by Phil McConkey. There it is. Out to a lucky member of our studio audience.
That's really cool.
Number 356.
356 is the winning number. Whoever has that, you're about to get a football. This gentleman right here. Thank you so much. Thank you very much. All right, Phil McConkey, folks. We have a lot more ahead on Halftime Report as we continue to honor the nation's veterans.
Next up, the gang's all here. We'll hit the blitz as we trade today's biggest movers. Plus, the Nigerians are both finding unusual activity in the options market to see which stocks are set to pop and which will drop. The Halftime Report from the Intrepid Museum is back in 2 minutes. Halftime Report on the Intrepid is sponsored by Boeing, continuing our mission to connect, protect, explore, and inspire.
Life didn't always look like this. I didn't grow up in a good area. When I decided to join the military, I told the recruiter to take me as far away as possible. I served on a 283-foot-long ship in the Bering Sea. The number one thing to know is that you're there to serve. At Boeing, it's no different. I'm using the knowledge and experience I've gained throughout my whole life to inspire people to have new ideas and think differently. That's something that's everlasting.
Right now, wild tigers face an urgent crisis. Black market demand for tiger skin and bone has surged, triggering a spike in tiger poaching. Wild tiger numbers are so low that this demand could push them to extinction. But WWF is working to increase the number of wild tigers. Your support can help us stop poaching, eliminate demand for their parts, and protect their habitat. You can help us stop wild tigers and other endangered species from vanishing. Call or visit WWFnow.org to symbolically adopt a tiger for just $8 a month and receive this free adoption kit as a thank you. There is nothing as final as extinction. Act now, before it's too late.
So you've decided to go to college. That's cool. So pop quiz. Which is a better way to earn your degree? Commute to college and fill your gas tank, get stuck in traffic, drive in bad weather, try to find a parking space, walk a half mile to class, or learn online at Independence University. You don't go to college. College goes to you. That's independence. That's Independence University. And all your supplies, including a brand new laptop and tablet, are included with tuition. Independence U, for an independent you.
1-800-950-8480.
On an earnings basis, stocks have definitely come too far. But in the real world, there's much more than one way to value a company. And right now, merger potential is driving this market as much as anything else.
The USS Intrepid was a true sea warrior. Construction began December 1st, 1941. 6 days later, Japan attacked Pearl Harbor.
December 7th, 1941, a date which will live in infamy.
Soon after, it joined the battle in the Pacific, surviving a torpedo strike from a Japanese submarine and 5 kamikaze attacks. The Intrepid then became a submarine hunter facing off against Soviet forces during the Cold War. In the 1960s, the USS Intrepid served as a recovery ship, scooping up capsules and their crew after returning from space. The next mission, ferrying fighters into attack positions during the Vietnam War, its planes making thousands of sorties. 270 sailors aboard the ship made the ultimate sacrifice for their country. In 1974, the USS Intrepid was decommissioned and now sits peacefully on the Hudson River, giving people from all over the world a chance to visit a one-time powerful force of the great American Navy.
All right, we are back on the Intrepid today. Sea, Air, and Space Museum as part of our Veterans Day special program today. The trainers, as you can see, are here. Steve Weiss, the brothers Nigerian, John and Pete, Sarazati as well. We want to kick things off with our call of the day, a regular segment that we do every day. But we don't see every day is a retailer getting upgraded, not to mention one getting upgraded to outperform, and that is Kohl's. What do you guys think of this call? Outperform at Baird. They raised the price target only by $1 to 47 from 46. Steve.
I don't like the call. Look, he's been on the sidelines and he's, stocks underperformed the S&P by 15%. But here's the issue. He's got flat earnings for 3 years. I'm still paying 11 times for that. Why would I do that? The model's still challenged. Look, 90% of their store base is outside the malls, but so what? So I think the model's broken. There's no point being here again. If the stocks came down based upon Macy's earnings and Nordstrom, I was ready to jump in. But unfortunately, they went up. I'll wait for a decline and maybe get in for a trade in front of, Christmas shopping.
So even the fact that they say 90% of Kohl's business has nothing to do with the mall. We know how challenged the mall environment is.
It's the model that's broken. In other words, they're still competing with Amazon. They're competing with Jet. More competition's coming up, so I don't think you want to own it.
Anybody else want to take the other side?
I don't. I mean, when in your upgrade, Scott, you talk about we're stabilizing in my traffic numbers. I don't know that I get all that excited about stabilizing. I'd like to see some growth areas.
They do say stabilize.
And if you look for growth right now, I think we'd all probably agree, at least I would stand by, look at Costco, look at Home Depot, look at some of the names that are actually able to battle Amazon, as you bring up. Best Buy. If you can battle and win, Best Buy, I love that name. I think they've done a great job. They're one of the conquerors over Amazon. I'm glad you remembered that.
The shocking conqueror, really, in some corners.
Absolutely.
And I would add Limited Brands on that one, too. I think when you're looking at
showroom this, right?
Exactly. Yeah. And I think, one of the things in the note said, it's got a 5% dividend. I don't think you want to buy this with a dividend. You want to buy a company for growth, especially in an area we're in right now. Growth is what you're going to get paid for, not for stabilization.
I like Limited Brands, just like Surat saying. I've seen activity in there. The stock had a nice pop.
Kohl's, on the other hand, that was a disastrous day yesterday, and it's had a little bit of a bounce, and I think a lot of people
and by the way,
are selling it.
Kohl's is getting this halo effect of Amazon as well, because Amazon might be using it for some of their deliveries. Right. So you got to be careful to see what money's really in this stock as well.
But best case for the analyst, he's coming out with 18. Which we're pretty much at 18 now because of how they report.
Look, at some point,
3 years in a row.
Some of these retailers, these large department stores or otherwise, they must be good bargains at some point.
Here's why it's early. Number one, they've got such a high fixed cost base. They've got to carry inventory, and they've got to carry too much inventory because you don't know what tastes are. And you can't ever have a shopper go there and say, wow, they're out of it, because they'll just go online.
Right, look at what I'm saying. 2017 performance, the route, TJX, which, Pete, I know you like, down 7.5%. There's Kohl's and Nordstrom and Macy's, and oh yeah, JCPenney, which we're going to talk about in a moment.
In each case, though, the earnings are down as much, if not more, than the decline in the stock price.
And you know it's a bad sign when they start saying, well, you know what, if you look at the real estate value, I mean, what was the first company that came out with that? Sears. Everybody said, well,
actually, and they're filing for bankruptcy.
Right.
Toys
I
R
mean,
Us.
so that is not a good sign, and that's what everybody always says about Macy's and everybody else. Well, if you look at the real estate value, well, that has not worked.
All right, let's switch gears and talk about the blitz. There are a number of interesting stocks on the move today. Let's hit Apple, okay? Todd Gordon comes out and says that Apple could pass the $1 trillion market cap by year's end. We know it's eventually, we think it's going to hit $1 trillion, right? It crossed 900 billion for the first time ever in the last couple of days. Trillion by the end of the year?
End of the year might be a little bit aggressive, but by January, give yourself another month because the way Apple can move it, it's going to have some pullbacks and some stops along the way, but the numbers, Scott, were just that extraordinary, and we've gone over the numbers already after the post-earnings, but wait until we start to see the 10 numbers start to flow in, and that's going to be something, and if the demand is there as big as we all think that it probably is.
And they can meet the demand.
And meet that demand, that could be unbelievable for the stock to push it higher.
Okay, so, Doc, I bet you that there are people in our studio audience just on the other side of that wall here at the Intrepid Sierra and Space Museum who are in GE.
Yep, I'll bet there are.
GE wins a government contract with the Pentagon, $643 million.
For engines, yep.
What's going to turn this stock around?
When they finally cut the dividend. Honestly, Scott, it'll be the same as Kinder Morgan when they cut their dividend. The charts look identical. When they start sliding as hard as they are, as hard as GE is, and it seems to have gathered itself right around that 20 number. I think perhaps it tests a little lower. I'm already long it, as you know, but I'm getting 50 cents every 2 weeks for selling out of the money calls. That's 2% every 2 weeks for selling these calls. I'll take that as far as it cushions any of my downside risks and gives me a lot of upside still here.
Okay, probably have some ownership, Pete, as well in Disney.
Yes.
Okay, Disney comes out with earnings, missed on every metric under the sun, and maybe even missed on metrics that didn't even exist. Yeah. Okay, Bob Iger, stock goes down. Bob Iger gets on the call, and the stock goes up.
Goes from
and the stock's up
104.
3% right now. Why?
Yeah, well, I think because of the promise that he actually offers in terms of looking a little further out. Give us some time, kind of that Amazon. Give us time, we're going to show you what we can do. They talk about 2019 already, and people are willing to buy into Bob Iger because he's got a proven track record. Now,
he's going to be leaving.
Right, but have I been disappointed in the fact that he hasn't done a great job in streaming? Yes. BAMTech, that was a great thing, but it's great to know that he's been kicking the tires of Twitter.
They got a new service coming out.
Right, and they've got a new service coming out. So the combination of all that, and they're making cuts, that's not fun for anybody losing your job, but there are areas where there is room, they need to make some cuts to get themselves back to a much better growth.
And Judge, he basically came out and offered an optimistic outlook when he says, I'm putting $1 billion back into theme parks.
Right.
I'm putting all this money into the Star Wars franchise and so forth. So instead of just saying, woe is me, and wringing his hands, he says, I've got a solution. I'm going to spend my way out of this. The street will give him a quarter to see if that's true.
All right, Sarat, the momentum stock of the year. Let's call NVIDIA that. Earnings, good. Stock, boom, yet again. What are investors to do with a name that just continues to go higher? It's up 6% yet again today.
So earnings were 40% quarter on quarter. Gaming, data center, artificial intelligence, all your buzzwords. We own the company, I own the company, but I would be careful here. I would take some money off the table. Don't chase the stock like this because you have so much momentum behind the stock. Great, fabulous company. I think they've got a few quarters ahead of them that are going to do really well. I just wonder when the growth rate slows just a tick, that stock will get sold off really fast.
I remember yesterday Kramer was saying in terms of the you know, the NASDAQ being down, you know, the stock has done so much, it needs a breath. It needs to rest. It's a good thing, and yet you're 6% higher again today.
That's momentum. That's the definition of momentum. But the risk reward in this stock is incredibly unattractive. Ultimately, that growth will slow down.
It's the law of large numbers.
Mobileye can come in.
Right.
So it's a lot of hype. I just think if you got
Is there a law of large numbers? I mean, hello, Apple.
I've never believed
right?
in that whole thing.
We expected Apple to fall
but,
as a result of that.
But Apple doesn't really have any true competition. Your point of Intel and AMD coming in, you can, in a quarter or 2 quarters, catch up in the semiconductor world. We've seen that in Qualcomm, right? I mean, you've got people mimicking their chips. At that point, when that happens and you slow down your growth and you bring your margins down a little bit, that Goldilocks scenario that they're in, that could come down and your 60 multiple goes to 40.
That was the same story in Qualcomm, actually, not only during the dot-com bubble,
but
right,
even for
5
years ago,
where it is,
because
but
nobody
yes,
could catch
exactly
up to
5 years ago, 6 years ago.
Scott,
they owned the market. You needed their chip.
The point for NVIDIA, that when we finally do see an actual pullback, a real pullback, is when they do not show the acceleration of what we've seen in growth.
Okay.
That'll be it.
Let's turn to unusual activity. John and Pete always looking for that, as you know. Micron, Doc, is your name of
That's
the day?
me.
So that's Pete. Okay.
I don't know how many times. I've probably put this up there for you guys, probably 15 times in the last 3 months.
Maybe more.
Maybe more. But I'll tell you what. How about the reaction out of this stock? Once it got through 32.5, it's been going higher, higher, higher. Look at Micron, the January 46 calls today. It's part of a big spread, so I'm not going to go through all of that. 30,000 of the Jan 46 calls were bought today. They were selling downside puts. That's bullish as well. This stock is going higher. No doubt.
Got a quick one for you, Judge. CarMax, KMX. So a lot of people would say, wow, if rates jump up, that's going to hurt these guys. Rates haven't jumped. In fact, they're barely crawling.
That's for
sure. These guys, I think CarMax, making a move, as you see today, up 1%. They're buying upside calls at the 75 strike and higher. I like it. I'll probably be in it in about 10 days.
All right, good stuff. Great to have you guys here today.
Thanks to be
Very
here.
special day. We have a lot more straight ahead from the Intrepid Sea, Air, and Space Museum as part of our special Veterans Day program.
Straight ahead, leaders of a network founded by a Wall Street legend to help Americans returning from war. See how the Cohen Veterans Network is going above and beyond when the halftime report returns, live from the Intrepid Sea, Air, and Space Museum. Halftime report on the Intrepid is sponsored by Boeing, continuing our mission to connect, protect, explore, and inspire.
I was always attracted to the military. I served at Andrews Air Force Base, South Korea, and Saudi Arabia. When you're deployed, honor and integrity have a very immediate meaning. I've taken those same lessons with me for over 20 years at Boeing, but it's those lessons you internalize that make you a better teammate. And Boeing is a company that knows that.
There are a lot of struggles that many service members go through in terms of how to properly translate the skills that they acquired in the armed forces. Boeing's investment is going to directly impact over 200,000 transitioning service members.
Charles Schwab Cup Championship today at 4 p.m. on Golf Channel.
Tough on dishonesty.
They keep denying things that then turn out to be true.
Love for country.
Being an American is an honor, and those who become Americans know it, feel it, revere it.
Tough love, administered nightly, weeknights 7 to 11 on MSNBC.
It's my pleasure to take you on a tour of the USS Growler today, the submarine behind me, part of the Intrepid Sea, Air, Space Museum. What a lot of you will recognize is the periscopes. These would come up about 15, maybe 20 feet above the sail of the submarine. Now we're entering the crew's mess. 85 people would be out months at a time, and this would be their only recreation space. Here we are in the torpedo room. In front of me is an actual torpedo, 21 inches in diameter, about 20 feet long. You'll notice that there are actually racks here, berthing spaces, because no space goes wasted on a submarine.
All right, we're back, and it is important on this Veterans Day to remember that those who return from the battlefield, the fight certainly is not over. That's why hedge fund legend Steve Cohen founded the Cohen Veterans Network. It's a free clinic to treat a variety of mental health issues for veterans and family members. Mr. Cohen does have a personal connection as well. His son is a Marine, and he did serve in Afghanistan. Dr. Anthony Hassan is with us. He is the CEO, by the way, of the Cohen Veterans Network. Halftime regular Ian Weiner is with us here on the Intrepid Sierra and Space Museum. He's a part of this network on the West Coast as well. It's great to have you with us.
It's great to be here.
So, Doctor, why don't you tell us how this was started?
Well, Steve Cohen, his son came back from Afghanistan, and they had a conversation and said, if you want to help, there's a huge gap, and the gap is in mental health care, but not just for veterans, but for military families. So Steve crafted a strategy, hired me, and we're building clinics across the country.
I want to be clear, you guys do not take any outside dollars at all. Is this 100% Mr. Cohen's money?
Right now, it's 100% Mr. Cohen's money, $275 million. He's given us to establish a network of clinics across the country.
Was launched in April of 2016, and you currently have 7 clinics in operation. Are they all around the country? What kind of locations
That's
are we
correct.
talking
They're all around the country. New York, Philadelphia, Dallas, San Antonio, El Paso, Fayetteville, and D.C. We have plans for 25 by 2020. We're going to high-need communities where there's a demand and an unmet supply, a lacking of supply, and we're making a difference.
What do you think of the percentage is of those in the military who are returning home from the battlefield who need mental health?
It's hard to say. When we talk about PTSD, that's what most folks talk about, post-traumatic stress disorder. About 20% are asking for help or need help. But there's a lot more than post-traumatic stress. Families have been affected by more than a decade of war. Men and women who didn't receive treatment when they were in, when they get out, they're looking for a place to get care. And frankly, it's difficult to find quality mental health care in America. We're filling the gap for veterans and military families.
Ian, tell us what you're doing on the West Coast.
Well, essentially, Scott, I'm helping as part of the beachhead to get into the West Coast. We'll be looking at San Diego as potentially a next location for one of the clinics.
Which is a huge naval hub, is it not?
Yes. And having worked for Steve and as a West Point graduate, it was sort of a unique combination to help get involved with the Cohen Network as they expand across the country.
You want to tell us a little bit about your own military story for those who don't know? We've mentioned it before that you are a West Point grad, but beyond that.
After West Point, I was non-commissionable because I blew out both of my eardrums while serving in Korea on the demilitarized zone. So because of that, I was essentially left to figure out what I was going to do next. And fortunately, Goldman Sachs had an opportunity to work on the floor of the New York Stock Exchange as a phone clerk. And so it was a big change, but one that's ultimately worked out.
You want to talk about just what it's meant for veterans to have a place on Wall Street. Jamie Dimon obviously makes a big deal of that at JP Morgan Chase, Goldman Sachs, and so many other firms.
Well, I think the most important thing is that the country realizes that how much of the battle is when they get back home. And that transition, in order for a normal life, to be able to have a family, to be able to have a stable paycheck, and I think the banks have done a tremendous job with that, is truly the key for integrating people back into society.
You want to give us your market view, since that's why we generally have you on. How do things look to you?
Well, I think things are a little frothy, but I think it all comes down to tax reform. If they can get something done that doesn't blow out the deficit, ultimately the stock market can continue to work. But if not, I think we're probably near a top.
What happens if, in fact, corporate tax cuts are pushed off?
Well, I think that you're going to have a big problem because the reason the market's gone up, in my opinion, is just a lack of supply. People are not selling stocks because there is an alternative and they're expecting a big tax reform repatriation. So if that doesn't happen, everybody that's been waiting for that to sell will start selling now.
Yeah, it's great to have both of you with us. Ian, thanks for being here. Ian Weiner, Doctor, our thanks to you as well. Congratulations on everything you're doing to help our men and women in the military when they make the transformation from soldier back home. And give our thanks to Steve Cohen as well.
I certainly will. Thank you.
All right. We have much more straight ahead on our special halftime report from the Intrepid Sierra and Space Museum right after this.
When we come back, another veteran success story. A man who took what he learned in the Army and now applies it to money and sports. Plus, our traders have their final trades. The Halftime Report, live from the Intrepid Sea, Air, and Space Museum, is back in 2 minutes. Halftime Report on the Intrepid is sponsored by Boeing, continuing our mission to connect, protect, explore, and inspire.
4 years ago, I felt like I was drowning. I didn't even want to be considered a veteran anymore. While I was recovering, I realized that I was one of the lucky few who had been given a second chance. Today, I'm embarking on a new mission with Boeing, reaching out to veterans, showing them that the values and skills they gain in the military are precisely the things that make them valued employees.
Their experience is coveted. Their leadership is instinctive. They're experts in things you haven't heard of. Researchers of technologies that one day you will. Some call them the best of the best. Some call them veterans. We call them our team.
Okay, I picked out my dream car. Now's the really fun part. Choosing the color, the wheels, the interior, everything exactly how I want it. Here's the thing, just because I configured this car online doesn't mean it really exists at a dealership. But with TrueCar, I get real pricing on actual cars in my area. I see what others paid for them, and they show me the ones that match the car I want. So I know I can go to a TrueCar certified dealer, and it'll be right there waiting for me. Today, right now. This is TrueCar.
Everyone loves the delicious taste of crispy bacon, but cooking it in all that pan grease and fat? Who wants to eat all that?
Yeah.
Not you. Introducing Bacon Bonanza by Gotham Steel, the lower fat way to make crispy, delicious bacon every day right in the oven. Just line the Bacon Bonanza rack with up to 12 strips of bacon, then place it in the oven. The rack keeps your bacon lifted, so it's not cooking in all that grease, and the custom fitted pan catches all that fat, keeping your bacon lean with less calories and less cholesterol. Now that's healthy. You can also use the non-stick pan to make sheet cakes and more. Call or go online to get your Bacon Bonanza by Gotham Steel for the special TV discount price of just $19.95. Order today and we'll even ship your entire order free. That's right, free shipping. And to give the gift of healthy bacon to a friend, you can get a second one. Just pay a separate fee. Call or go online now to buybaconbonanza.com. Order now.
Cheers.
Friday nights.
All right.
Get tanked.
How clever that is.
What a wonderful way to end the week.
This could
change everything.
Grasshopper, tell me more.
Shark Tank, tonight, 7 p.m. to 2 a.m. Eastern. CNBC. Get yours.
Welcome back to a special edition of the Halftime Report on CNBC. Now, once again, here's Scott Wapner and the Halftime Report traders from the Intrepid Sea, Air, and Space Museum.
Indeed, welcome back to the Halftime Report on CNBC. Live today from the Intrepid Sea, Air, and Space Museum. From the battlefield to the business of NHL hockey, Matthew Caldwell is the CEO of the Vinny Viola-owned Florida Panthers and a veteran officer in the U.S. Army, also a former vice president at Goldman Sachs. It's good to see you again. Thank you so much for being here. You've made the transition certainly from the military into corporate America and into professional sports. But what does this day mean to you?
It's really important. I remember all my soldiers that I served with. I was in the Army for 5 years, served in Iraq for about 15 months, and Kosovo for another 7 months. And I think about the men and women that I served with and with their lives on the line, some soldiers that we've lost. You know, my battalion lost 36 soldiers, and I know every one of them, and I try to stay in touch with their families. And you know, with social media nowadays, you know, you can stay in touch with these folks. And so for me personally, I think about all the people that I served with.
I'm going to go out on a limb and say there are some similarities between serving with a team in the service and then helping run a team in professional sports.
There is the camaraderie, first and foremost. I would also say, you know, people, our players have really picked up on, you know, the culture that we brought and the military spirit and teamwork. And They all fight for each other. You know, they all stand by each other. They physically fight for each other on the ice sometimes. So yeah, there's definitely a lot of similarities, and I've been able to integrate pretty well.
Do most of the players know about your own military background?
They do. Yeah, we're real close. We brought the players to West Point a few years ago. I think they had a blast enjoying knowing where their owner came from and team president. So they know about our backgrounds, and they're very curious and always asking questions about it.
How'd you guys find each other?
With Vinny? Yeah. Well, when I worked at Goldman, Vinny was a big client of the firm, and he took a liking to me, I guess, a young West Pointer from Staten Island, hustling, maybe just like he did.
Scott, and I apologize, Matt, for doing this publicly, but what Matt will never tell you is that Matt was decorated for valor on the battlefield, and I can't thank you enough for your service and your display of courage.
Thank you.
Did it mean something, Vinny, more to you to be able to hire somebody like Matt to run something so personal like a professional sports team where you have invested personally?
Yes, absolutely.
Millions and millions of dollars?
Absolutely. The trust that exists amongst those who have served is, quite frankly, it's unspeakable. It's implied and expressed. Sharing with Jim stories of what it was like for him to serve in our nuclear force, our nuclear fleet, being a submariner. There is so much common history that goes to service, because service is about something larger than one's self. Sacrifice. The idea that you're not the center for all being, and the world doesn't revolve around you and your latest Instagram post is very powerful, and it exists in our military. It's central to our society's excellence and our American exceptionalism. I truly believe that, and we're very lucky to have experienced it. It's our blessing to have served as much as our sacrifice to serve.
We don't have much time left, but Joe had a question, I know.
Yeah, just real quickly, Vinny, back when you and I had far less gray hair, the price of oil certainly would have went a lot higher if we would have gotten the news we got this weekend with Saudi Arabia and Iran. Is that indicative of the risk environment we live in right now, and are you surprised by it?
I think it's probably more indicative, Joe, of a fundamental shift in the oil market, the oil dynamic. I think we've gone from a peak supply paradigm to a peak demand paradigm. And in fact, we don't think in terms of available supplies and future supply forwards. We think now in terms of the eventual peak of the demand around fossil fuels. I am very surprised that what's happening, the strategic proxy war that's going on now between Saudi Arabia and Iran, the Sunni-Shia divide, is not being more discussed, not only for political perspective and security implications, but quite frankly, for economic implications. So another long Vinny answer. So peak supply, now we are in a world of peak demand. Long-term prognosis for the price of oil is generally in a down market or down paradigm.
I mentioned this at the top, but thank you again, both Vinny Viola and Matthew Caldwell, for being here today. We're grateful for your service and certainly thankful that you're here today with us.
I need to be my typical rude self. A couple of things. I want a big shout out to my classmates from the class of 1977 at West Point. We just enjoyed our 40th reunion at the Military Academy. I'm humbled by the service that my classmates have put forth. So many of them have been engaged in these wars and service. I also want to make a big shout out, Joe, if you don't mind, to the Virtuians at Virtu Financial and for the fight that they fight every day on behalf of better markets. And Scott, thank you very much.
No, it's our
pleasure.
Very much. Matthew as well.
Thank you.
All right. right, we want to get to some final trades before we get out of here. Steve, John, Steph, Pete, and Surratt, you're up. Go ahead.
I'm going with the XLE. I know it's been up, but with everything going on in the Middle East, Saudi unrest, etc., buy it. It will go higher.
I'm going with Best Buy for my final trade. Earnings next week. Stock's up 31%. They're buying puts. So if you want to be safe and you're in the stock, you should be aware of that.
Dow DuPont, they just completed the merger between the two. I think there's catalyst ahead, a $3 billion cost synergy plan, $4 billion buyback. Stock trades at a discount to the group.
Cisco Systems, they got earnings next week. They're going to crush it. It's the cloud, baby.
Macy's off 10% of the bottom. Watch this stock. This one, if it actually goes through 22, could go much higher.
All right, that was classic Pete. And I'm sure for those of you who didn't get that, we'll put it on our website, cnbc.com/halftime as well. We'll tweet them out for you, certainly as well. But before, Joe, you give us your final trade, what do you think of Weiss's XLE pick? Goes in line to what you guys were talking about.
Yeah, listen, I think it's a nice way to get broad diversification in the energy space. But getting any type of exposure in energy right now is very complicated, very difficult, and also less important because it's such a smaller weight in the S&P than it was 10 years ago.
Jim Lebenthal.
MSG, this is a sleeper pick. And it's not just because the Knicks are...
Come on, the Knicks are getting better.
With the Florida Panther owner here, you're talking about the Rangers?
You mentioned the Rangers. I mentioned the Knicks. I had some politeness.
That's fair. So MSG and Mario Gabelli pick as well. He was talking about that with us, of course, yesterday, the legendary investor was. Congratulations again on your service. And thank you so much. Thanks to everybody. That does it for us. Thanks to our live studio audience. Everybody who helped make this broadcast possible at the Intrepid Sea, Air, and Space Museum, from all of us here on the Halftime Report. Remember Veterans Day. Salute our veterans for all that they do.
Scott, thank you very much. Fantastic program, and congratulations to the veterans and to all of you on a wonderful program there. Welcome, everybody, to Power Lunch. We're going to continue it. I'm Tyler Matheson. Glad you could be with us. Here's what's on the menu. Undercutting Netflix. Disney says it plans to price its streaming service substantially below Netflix. Investors cheering the news and looking past an earnings miss at the House of the Mouse. But will it all be enough to offset declines in most of Disney's businesses, most especially media? Big biotech mover Sage Therapeutics soaring more than 40% yesterday on the results of a new drug trial. The CEO here to explain the breakthrough and what it means for the company. Plus, Roger Goodell, the NFL commissioner, on the hot seat. His job now being challenged by one of the most powerful and important owners in the league, Jerry Jones of the Cowboys. We'll talk about that and more on Power Lunch, which starts right now.